The most bizarre stock market strategy you've ever heard of. In the high-stakes world of financial markets, where fortunes are made and lost in the blink of an eye, one man's discovery threatened to rewrite the rules of trading. It all began with a curious observation. A trader, let's call him James, stumbled upon an uncanny correlation. The fluctuations of a particular stock's price mirrored the temperature swings in a small, unassuming town with eerie precision. Though the amplitude differed, the rise and fall of the stock chart traced the same peaks and valleys as the local weather patterns. Intrigued, James dove into a whirlwind of research, combing through data to confirm his suspicion. To his astonishment, this bizarre connection held true only for this one town place that, by sheer coincidence, housed a prestigious meteorological university where his ex-girlfriend, Sarah, taught as a professor. Convinced he was onto something monumental, James felt like the chosen one, destined to unlock a secret that could revolutionize trading. He boarded a plane to reconnect with Sarah, eager to share his discovery. At first, Sarah dismissed his theory, suspecting the relentless grind of trading had clouded his judgment. But when James laid out the chart's stock prices alongside temperature data, she couldn't deny the striking similarity. The gears began turning, and James pitched an audacious idea. If weather could be predicted, so could stock prices. He proposed building a trading model based on this correlation, promising Sarah a share of the profits if she helped. Her initial response was cold, tinged with resentment from their breakup years ago. Sensing the tension, James backed off, but later, over a quiet dinner, old sparks reignited. As they reminisced, misunderstandings melted away, and Sarah agreed to collaborate on the model. Their chemistry wasn't just professional, the two rekindled their romance, united by a shared vision. Together, they got to work. Sarah pulled 6 months of temperature data. James compiled the corresponding stock movements. When they fed the data into a statistical model, the results were staggering, a 91% correlation between the two. This wasn't just a fluke, it was a goldmine. Buoyed by confidence and their renewed bond, they refined the model, mapping temperature forecasts to stock predictions. James, brimming with optimism, convinced a colleague, Tom, to join the venture. Using their trading privileges and company funds, they launched their strategy. With Sarah feeding real-time weather updates from her lab, the plan was foolproof. When temperatures rose, short when they fell, they were about to disrupt the financial world, or so they thought. But markets are merciless, and fate had other plans. On the first day of trading, James executed a massive short position based on a predicted temperature drop. Instead, the stock soared, defying the model. By the close of trading, their portfolio was hemorrhaging a jaw-dropping $20 million loss. Over drinks that night, James clung to hope, urging Tom to trust the model. "One more day," he insisted. But the next morning, the stock continued its relentless climb. Their boss, livid at the mounting losses, summoned them to his office. After a scathing tirade, he forced them to close their positions, crystallizing a $21 million loss. In a fit of rage, he fired them both on the spot. For James, the blow was devastating, but his faith in the model remained unshaken. He believed one more day would have turned the tide. Tom, however, was broken. Not only had he lost his job, but he personally invested in the short, racking up crippling debt. Overwhelmed and unwilling to burden his family, Tom made a tragic choice. Standing outside his home, watching his wife and children through the window, he took his own life. The news shattered James, who was consumed by guilt. He resolved to abandon the model, convinced his obsession had led to disaster. Yet, at Tom's funeral, an unexpected twist emerged. A former colleague, Emily, approached James, intrigued by the weather-based model. She saw potential where others saw failure and offered to fund a startup to bring the idea to life. Reluctantly, James agreed, driven by a mix of guilt and a flicker of hope. They founded WeatherWealth Inc., a bold venture aiming to harness meteorological data for market predictions. Emily's capital and James's vision attracted top data scientists, and they expanded the model. incorporating machine learning to account for market noise and macroeconomic factors. Sarah rejoined the team, refining the algorithm with her expertise. The financial world took notice. In 2025, as markets grappled with volatility from global supply chain disruptions and inflation fears, WeatherWealth's model began to shine. Pilot trades yielded modest gains, catching the eye of hedge funds. By cross-referencing weather patterns with commodity prices like agricultural stocks tied to temperature-sensitive crops, they unlocked new alpha. A soybean futures trade, timed to a heatwave forecast, netted a 15% return in a week. Venture capital poured in, valuing the company at $200 million within months. James, once a pariah, was hailed as a visionary, though the scars of Tom's loss lingered. This saga isn't just a tale of triumph and tragedy, it as a masterclass in the high-risk, high-reward world of finance. First, it underscores the power of unconventional thinking. Markets reward those who spot patterns others miss, whether it's weather correlations or AI-driven sentiment analysis. Second, it's a stark reminder of risk management. James's unchecked optimism led to catastrophe. Diversified strategies and stop-losses could have saved him. Third, resilience is key. From ruin to redemption. James's journey shows that failure is only final if you stop iterating. In today's markets, where quant funds like Renaissance Technologies leverage obscure data for billions in profits, WeatherWealth's story fits right in. For investors and entrepreneurs, the lessons are clear. Embrace innovation but temper it with discipline. Tools like predictive analytics and big data are transforming finance. Global spending on AI markets is projected to hit $52 billion by 2026, yet human judgment remains critical. Diversify your bets, stress test your models, and never bet the farm on a single idea, no matter how brilliant it seems. And in the age of social media and instant news, reputation is everything. James's comeback hinged on transparency and results. WeatherWealth's rise also highlights the growing trend of alternative data in finance. From satellite imagery tracking crop yields to social media sentiment driving crypto trades, unconventional signals are reshaping markets. Firms like BlackRock and Goldman Sachs are investing heavily in data science, with weather-based models gaining traction for commodities and energy trading. Yet, the story warns of overconfidence. Even a 91% correlation can falter under market unpredictability. Think of the 2008 financial crisis, where models failed spectacularly. Risk management, like setting tight stop losses or hedging with options, is non-negotiable. In the thrilling arena of financial markets where every tick of the clock can mean millions won or lost, the story of James and his weather-based trading model is a testament to the audacity of innovation and the perils of unchecked ambition. It's a reminder that in finance, as in life, the line between genius and folly is razor-thin, but with the right adjustments, even the wildest ideas can change the game. Stay curious, stay cautious, and keep your eyes on the forecast, because in markets, the weather might just be your edge.